Hello, everyone, and welcome back to Trade of the Week. This is the week the market's been building toward. The Fed decides Wednesday, and the mega caps report alongside it. And the US 500 sits right at the center of it all. Now, let's check the technicals. As we can see, since the March drop, the index has been in a sustained recovery. April 20 marked the start of a clear formation, a series of higher lows building underneath a ceiling that's held around the same zone near 7,600 points. Right now, price is testing that lower edge of that formation, with RSI sitting mid-range. Both the 20 and 50 moving averages are acting as local resistance around 7,475 points. Now, the levels that matter. How price reacts around here becomes highly important for the broader market. A break below that lower level puts the bears in focus. It's the first Fibonacci retracement level of that last uptrend, reinforced by the 100 moving average. And a deeper correction from there could bring the psychological 7,000 point into play. Now, on the upside, a strong earnings beat and an easier Fed tone could support the bulls toward the local resistance around 7,475 and potentially a retest of all-time highs near 7,600. For now, this remains a formation, not yet a signal. We still need a break and close, either above the ceiling of the structure to turn genuinely bullish, or a drop below 7,300 where bears might take control. And this week's events are what decide which one gives way first. Watch the reaction, that's where the story is.